Welcome. You're tuned in to another edition of the End of Day Report with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live at PulseWaveTrading.com, home of the world famous PulseWave price trigger reports that we put in your hand each and every day. Normally, this is preparation for Take Back Friday. We're going to do something different tonight because there have been some struggles and we need to deal with it. So that's what we're going to do tonight. So not taking any recommendations tonight because this is going to be a quick video. We're just going to talk about a few things. I will do NAC for you, VDub, in the live chat. So we'll just knock that out first before we get into our presentation. All right, so NAC is an equity. The ticker is N as in Nancy, A as in Adam, K as in King. So we had a rally alert for today's trading activity. As you see here, we did get some upside production before the market kind of reversed on the close. This would suggest that there is a possibility that the market may pull back further tomorrow. Not a guarantee, just a possibility. There also could be a little bit more upside because the trend line resistance right here is the initial target. All right, and we did have this gap that this market had to come up here and try to close. You could make an argument that technically the gap was closed today, and this could make the market pull back further. All right, so this is one of those you have to keep your eye on. But because it's basically a penny stock because it closed today below a buck, you would have to, treat this as buying opportunity. So if you took the trade today and you got long and got filled, you're just holding it at this point to see is the market going to give you another buying opportunity if there is a pullback. All right, so right now, technically speaking, the side of the trade right now is on the long side because it looks like we may have put in a short-term bottom here. All right, so that is how I would how I would read this. All right, here we go. Tonight, we're going to talk about a couple of things. One of the key chief things we're going to talk about is Bitcoin. We had some chatter today in the trading room talking about Bitcoin. Now, first and foremost, full disclosure, I finally got a chance to finish the commentary section of the PulseWave reports. All right, that's been a long overdue project. It's taken a lot longer than I wanted to fix it, but I finally got it fixed. So now the commentaries are going to look the way they're supposed to look, and they're going to read the way they're supposed to read. And what you're looking for in the reports on the commentary side is you're looking for the rally and the crash alerts. When it comes to rally and crash alerts, you're looking for one, the primary crash and rally alerts, and then there's two, the secondary rally and crash alerts. Those are the most important aspects that you're looking for in the commentary. All right. The reason being is because if you get involved in a trade during the initial rally or crash alert, now you're poised to capture the majority of the move if the market's going to start trending. If you look at this Bitcoin chart here, you see that there are times when the market can have extended periods of consolidation, like here. So starting on May the 8th of 2020, this market went into an experienced protracted period of sideways trading and did not get out of it until July the 26th. So we went from May the 8th all the way until July the 26th of sideways trading, going nowhere. Price action literally stayed within this bar right here. It stayed within the bar from May 8th all the way until July the 26th. All right? That's a long time for the market to move sideways and just chop up and down, up and down, up and down. You see there's a lot of flip-flopping. You got the rally alert here, you got a crash alert here, then a rally alert here, then a crash alert here, then a rally alert here, then a crash alert here. So there's a lot of, chopping around. So the only way to not get tore up is to catch it on the initial rally and crash alerts. All right. Sometimes the secondary alerts may be too late if you missed the primary and you only caught the secondary. If it's not trending but a sideways market, then you're gonna miss that. So you want to try to get involved when there is a primary rally alert. That's your initial alert. That's your red alert. Market is now looking like it wants to rally or crash, or you want to get in on the primary alerts. The secondary alerts is an opportunity to add a second position if you're legging into the trade. That's really what the secondary alerts are for. All right, for those that want to leg in and out of positions. They can also serve as a last chance to get in before the market starts to move. So it does serve that dual purpose. All right, but it's very important that you understand that. Okay, all the other commentary is just a breakdown of the market and specifically what's going on. But the bread and butter is the rally and the crash alerts. Those are the bread and butter of the commentary section on the reports. Okay. So what you're looking for again is rally and crash alerts, primary rally and crash alerts. Secondary alerts are your last chance to get in. It means you missed the first one. All right. And it's also serves as your opportunity to add another, to leg in, to add another position if you caught that primary. Okay. That's really what that is. Can you get tossed up in this if you miss those primary moves? Absolutely. So I understand that there was confusion with the commentaries. I finally got those fixed last night, though. So some people thought that the market, that the commentary was really saying, rally alert, when really it wasn't. So that was one of the reasons why I had to fix the commentary part. All right. But remember what I always taught you as well. The price triggers themselves are rally and crash alerts in and of themselves. So even if there's no rally or crash alert, the price triggers themselves act as that. Okay. So, and if you're going to have up and down weeks, all right, you're going to have a bad week. But here's what I do personally. When I start seeing ranges like this extend like this, when the ranges extend, so does your risk potential, and so does your profit potential. It's a two-edged sword. All right. It means increasing volatility is coming in the market. So if a market is a little bit too rich for you, you may want to sidestep it until the volatility calms down a little bit, or until the market starts, to move back in a trending fashion. All right, because the risk parameters will be reflected in the volatility of the market. And that's what I do personally. For case in point, if the Dow is getting too crazy and the average daily ranges in the Dow has been like 1,000 points, I'm not about to risk 1,000 points. All right, so I might have to sidestep the Dow and look at the S&P, or maybe the NASDAQ or the Russell. And if the NASDAQ is bugging and you got 200-300 point daily ranges, then I might have to sidestep that and look at this, like I said, the S&P or the Russell. If the S&P is having like an 80 point daily range, several days in a row, then I'm going to sidestep that. I'm going to go to the Russell. That's how you got to do that. And then there are times where I'll be like, you know what? The stock indexes are just bugging right now, and there's too much risk. I'm not willing to take on that amount of risk. Let me trade gold or silver, or maybe let me trade on the equity side. So maybe the NASDAQ 100 is bugging, but maybe the QQQ is a little bit more reasonable. See what I'm saying? So sometimes you have to go to the equity side instead of the future side. Same thing with Bitcoin. This is a Bitcoin chart. So maybe if Bitcoin is just a little bit too risky, I may want to go look at the GBTC, which is the Bitcoin ETF. Maybe that one is a little bit more reasonable, and maybe I can manage that risk a little better. So I always look for alternatives. And if that doesn't work, but I still want to be involved in the equity and the stock indexes, then I got to flip to my forex. And you guys remember what I taught you about forex, right? If you want to trade the S&P by proxy, then you're going to go long or short the euro yen or the euro dollar, because those two track with the U.S. stock market, point for point most of the time. Sometimes the euro yen will act like the Russell and start leading the market. All right. So if the volatility is a little bit too much, and I'm not willing to go long or short the E-mini S&P 500 futures or the NASDAQ or the Dow or the Russell, then I'll look for the equity side. But if the equity side ain't too much better, then I'm going to look now for the forex side of things. I'll go forex. And if that for whatever reason ain't working out, then I have one more option. I can go into the equity the options market on like the QQQ, buy puts or calls, or the SPY puts or calls. You can do it that way. And if that's still not working, then the only alternative you have then is just to sidestep those particular markets. You just can't trade stock indexes, or you can't trade Bitcoin today. See what I'm saying? So it's okay. There's other markets. So then you go to the next level. Okay, so I can't. The stock index is a bugging. I can't get in the way I want to get in. Well, let me look at the individual shares that make up that index. So let's see what FANG is doing. What is Facebook doing? What Facebook look like? What's Apple look like? What's Amazon look like? What Google look like? What Netflix look like? You know what I'm saying? What does Nvidia look like? Or Advanced Micro Devices, what they look like? Is Starbucks doing something? I'll try to find an individual stock that I may be able to get in, and be a part of. There's always something to trade. There's always an opportunity for you, even if the markets get a little bit too rich or the volatility gets a little too insane. There's a way to get involved and be able to minimize, or should I say, manage your risk a little better. And this Bitcoin chart is no different. I want to show you something else here. So again, you see this market move sideways from May the 8th all the way until July the 26th. That is a long time of the market just chopping and doing nothing. So rather than be married to the market and or risk being chopped to pieces during this time, sidestep this market and trade another. There are so many altcoins that you can trade. You can look at the top 20, top 30 coins and see if there's an opportunity there if this thing is just chopping around like this. All right. There is another school. I'm going to show it to you real quick. Another idea here. Now, traditionally, you can make the argument that markets move sideways more often, most of the time, than they do trending. So here's a situation where you you did trend. All right, you fell from here down to here. All right, almost like a diagonal line here if you drew it. All right, so this was a downtrending situation, but it was in a bull market. You're in a bull market, but the market is coming down on you. All right, so keep that in mind. Just because you're in a bullish complexion, it doesn't mean you're not in a overall bearish momentum setting. So you're in a bull market complexion wise, but it's trading like a bear market. It's in constant retracement. It's under liquidation. All right, that's what you see here going on with this Bitcoin. From here to here, you are in total liquidation. All right, you fell from up here around the 14,000 level all the way down here to the 6,000 level. That's humongous. All right, so again, markets usually move sideways longer than they trend, but in some cases like Bitcoin, it's been getting live. But if you look at overall, there are periods like from right here, from August the 10th of 2018 until November the 7th, you didn't go anywhere. And then all of a sudden, the market starts breaking down after that. Boom. See what I'm saying? So during periods of consolidation, whether you're in the Kumo cloud consolidating or you're consolidating above the cloud or below the cloud, a consolidation is a time where the price action just ain't moving. Now, you have other built-in mechanisms within the PulseWave report, because if you look at the weekly readings on the PulseWave report, if you don't see that number changing day over day, all right, and a whole week go by and that number ain't changed, that's telling you you're consolidating right there. You're no longer trending. You're not hitting new highs. You're not hitting new lows. You're going nowhere. So if you look at the weekly readings on the reports, it will let you know too. Are we trending? Or are we not trending? Because 9 times out of 10, if we're in a market that's trending, a market that's moving, then the weekly and the daily um, price triggers will be the same price. That means the market is trending and hitting new highs or hitting new lows. If the daily and the weekly are not the same price, chances are that market is consolidating. That means it's either topped out or bottomed out and it's going nowhere. Does everyone understand that? Once again, if the weekly and the daily prices are not the same in a bull market or in a bear market, then your market is consolidated and it ain't doing nothing. All right? Just remember, it's not hard. All you got to do is learn to read the reports and do what it says, and that's it. Now, I do understand that the reports were a little shaky as far as the commentary because the way it was going, so it made it look like everything was crazy. But now that that's been fixed, because I always told you can follow the price triggers themselves even without the commentary, but I know that's been a little more difficult for some people. So now I've married the commentaries with the actual price action. So it should be a lot easier for you to understand now. All right. So if there's no rally alert, no crash alert, you'll know how to play the market because the report will tell you what the environment is. Then all you have to do is now look at the daily and or weekly, and it'll tell you right away what time it is, what's really good. All right. So I just wanted to throw that there, put that out there so you can understand what's going on. There are times when the markets are just weird or just going berserk or whatever. And you just have to, like I said, that's part of trading. Every trade is not going to be a winner. All right. You're going to have good days, good weeks, bad weeks. All right. You chalk it up. That's a donation day or a donation week for you. All right. It's a cost of doing business. Okay. So just remember that you got to look at things the right way. All right. If you have a bad day or a bad week, chalk it up. Okay, fine. Tomorrow's a new day, a new market, a new trading opportunity. And don't try to get married to one market or just married, to one, mindset. You got to take what the market gives you. Sometimes it'll give you a little teeny bit of profit. Sometimes it'll give you none. Sometimes it may make you stay in the trade for several days before you see the fruition of it. So sometimes it calls for patience when you're trading as well. You know what I'm saying? So again, you don't want to overtrade. You don't want to risk too much. Again, when people ask me all the time, what is a good risk percentage? What do you do? 1%, 2%? I don't look at the market like that because you can't force your pocketbook on the market. If you can only afford a 1 or 2%, then you got to find a market then that's comparable to that because you can't force your purse on the market. The market doesn't care about your purse. All right. The only thing that matters is the volatility. So the recommended stops on the sheet are there for a reason because it's measuring the volatility in the market. And it's designed so that you can stay in trades longer when the market is trending and capture a lion's share of that trade. It's also designed so when the markets are chopping around like Bitcoin was doing right here, it's designed to get you out of the trade early so you don't lose as much. So doing a sideways market like this for about 2 months straight, you're taking small profits and you're risking small amounts. All right. So the system's going to force you to take profits early, and you're going to see those stops tighten, widen. They're going to shrink. They're going to widen. They're going to shrink. It just depends on what's going on. When volatility is like almost at zero, those stop losses are going to come in a little tighter. All right. That's just the way I built it. It's the way I designed the system. So keep that in mind. Now you have another tool at your disposal, people, and that tool is the loaded price trigger reports. The loaded reports are designed for day trading. All right. So you're not trying to capture a daily and weekly bar. You're just trying to make profit. So you're looking to go long and short every day and take whatever is on the table before you. That's what the loaded reports are for. And I think I do have loaded for Bitcoin. So if, you know, if playing the daily and weeklies on the Bitcoin is a little bit too rich for you, then why don't you use the loaded report? All right. The loaded report is going to get you both long and short in the market every day. All right. So that you can take whatever's on the table. If there's $100 on the table on the short side and $300 on the table on the long side, well, then you got the potential to either make both, a little bit of both, or whatever. That's what the loaded report is designed for. It's more designed for the day traders out there who say, "Oh, well, I got about an hour to spend in the middle of the day. Let's see what's on and popping. Oh, okay, I can make 250. Let me go ahead and take that 250 real quick." That's what that's about. So the loaded report is an option for you guys, especially when the markets are moving like this, all consolidated. When it's not giving you nothing on the daily and the weekly, you're not getting anything. Market ain't moving. Well, do the loaded. There's always money on the table in the market every day. Sometimes it's a little, sometimes it's a lot, but the loaded is always there for you. That is another option to you also when the market has a lot of volatility in it and those ranges are long. The Dow has 1,000 point, 1,200 point daily range. NASDAQ looking at 600 point. The other option would be the loaded, because I do that also. I say, okay, fine. I know the market's going to be all over the place today. Let me just use this loaded. Let me see what I can take off the table today. Just keep in mind, if you're going to use the loaded reports, you have to sit in front of the computer. Can't go nowhere because you're day trading. All right. You can't miss your opportunity to get in and out of the market. All right. So when you're using the loaded sheets, oh yeah, you're definitely looking to be either long or short or both when you're using that report, and you're looking to trail your positions and use pop when necessary and all that other stuff too. So just want to throw that out there. You have options at your disposal. You're not just stuck. You know what I'm saying? There's a lot of things you can do. Now, I know a lot of people love trading Bitcoin. All right, but just understand the nature of this animal. Sometimes you get ranges like this. Sometimes Bitcoin may want to move, a couple of $1,000 in a day, and using the weekly or the daily price triggers may be a little bit too rich, but you can use the loadeds to get you in and out real quick. See what I'm saying? So you ain't got to abandon Bitcoin, because I did tell you that you want to specialize in 3 or 5 markets, no more than 5 markets. If you can narrow that down, let's say even if Bitcoin is all you trade, okay, fine. Learn to handle this beast. Learn to tame this beast, so you don't get beat up or get your face ripped off. All right. So that's what this is about. All right. Just want to encourage you guys. So again, looking at this chart here. All right, here, this is Bitcoin, right? This right here is the primary crash alert that started everything. Look at the downside production you got. If you've been playing the short side of the market, then you've been happy. But if you've been trying to buy at any point in the market, then you were not successful because the market just kept dropping on you. And sometimes they'll do that. And you say, well, yeah, but it's in a bull market. I don't understand. I know. That's the nature of these markets. The market can rally in a bear market, and it can all but collapse in a bull market and still be in a bull market. It's just the nature of the beast. So that's why I try to give you as much as I can, man. I want to encourage everybody. All right. So I just want to let y'all know that that's why we do what we do, man. Again, I'm only as successful as you are. I need y'all making money. You know what I'm saying? I want everybody to be making money. And I want people to see this is what we do. This is how we coach, we teach, we admonish, we encourage. All right. And when you're messing up, I then I have to rebuke. You know what I'm saying? That's what we do. We're family. All right. And I want everybody to grow, because some amazing opportunities have presented themselves and will continue to do so. We got this election coming up. Do you remember what happened in 2016? Do you remember that night when I did that live broadcast? Do you remember how insane those markets were going? Well, that's coming again. And I can't wait. I am excited for that. The night of the election? Are you serious? You know the volatility is going to be out. It's going to be on them cracking, and I want to be all up in it. Now, some algo shifting has been noticed. It's not been wide across the board, but it's been in a few markets. I've noticed that. I've noticed there has been slight variations on the price action on the intraday levels, and it has not gone unnoticed by me. Bitcoin is also one of them. Now, I've been telling you that I think that we're coming down to this 10,500 support. I still believe that, as the momentum trajectory is still suggesting so. Now, what happens after we get to this 10.5 level is just going to depend on the market. All right. I don't think that we're going to change trend and drop significantly below that. What I'm thinking is the market's going to try to build some kind of base and support to prove that the bull is real. Because technically speaking, we haven't really done anything in Bitcoin yet. Look at this wide base back here that we built just to get to here, just to get to the 12.5. All right. You had to build this long base down here. This is a long base, you guys. This is long. This is 2 months of a base just to do the first thrust up. This is just your first leg. This is just the first leg, ladies and gentlemen. We still got more legs up coming. This is just the first one. All right. So it has to pass this first test of support. It needs to. This Bitcoin chart needs to start looking like this chart right here. I believe the Bitcoin chart is going to look like this NASDAQ chart. See what happened here? It just so happened it built its short-term base during the beginning of the pandemic. Then it took off. Now, it did test trendline support along the way with quite a few pullbacks that were successful. See what I'm saying? And then each time you got a new leg up. Well, this is what I'm waiting to see here on the Bitcoin chart. I'm waiting for this. This is the baby. This is the baby. To give you an idea what I mean. All right. Look at this chart here. Look at this Bitcoin chart, right? Here's your base. Here's your initial thrust up, right? I'm going to show you where we are in this to give you a little bit of understanding. Here's the NASDAQ chart. I'm going to show you where we are in the Bitcoin chart. You ready? Here we go. This is where we are in the Bitcoin chart. We're right here. We're right here. We're at the April 29th level of the NASDAQ 100. It's the NASDAQ 100 chart. This is the base that we built. The only difference is our base is above the trend line. This base is below it. That's the only difference. But this is where we are. We're only in the first leg. This is the first thrust, the first leg, ladies and gentlemen. We still have to go from there to here. And I want you to look at this. This is going to be the new Bitcoin chart. Once we get ahead, right? This is April, and here we are here in August, all right? So that's 4 months, all right? So in 4 months, this went from 9109 to 11946. Again, 9109, 119. All right? You see that, right? You see that, right? We're looking at the same chart, right? We get it? Okay. So that's it. So you see that, right? Again, 91. Here's 11. All right. So you got that, right? That's a lot of points, right? Okay. You went from 9,000 to 11,000. That is a 2,000 point move. Taking it back now to the Bitcoin. Where are we going, ladies and gentlemen? First leg. All right. First leg. So we're going to go. This should put us to around 15,000 within the next 4 months. Everybody wants to know, where are we going? Bitcoin should go to 15,000 within the next 4 months because we're at the beginning leg. Here's the base. Here's your leg. Once again, here is your NASDAQ 100 chart. Here's the base right here. And here's your first leg. See, it's the same situation. This is the anatomy of a mature bull market that has gone parabolic. That's what this is the bull that you want to see. This is the chart you want to see in all bull markets. If a bull market is going to be a really healthy, strong, parabolic type of bull market, this is what you want to see. Just like with bear markets. If you flip this chart upside down, I would want to see this going down like this in a bear market. See what I'm saying? So we're only at the beginning stage, the beginning thrust. We still have all this to build here in the Bitcoin chart. So we will go from 10,005 once we build this basing pattern up to 15,000. All right. I've been saying this for a long time. So I figured you guys need to hear it again. And I want to cheer you up. All right. So that you can learn to focus and focus. All right. Because you're already ahead of the game. All right. When you have the pulse waves, you're already ahead of the game. You already know what the market's going to do before everyone else does because they don't have the pulse waves. They have no rally alerts. They have no crash alerts. They have nothing. They're just looking at a chart and trying to see butterflies and sparrows and condors and alligators and lizards and tea leaves and crystal balls. Oh no, what does this bar right here mean? What is this one? Oh no. Okay, where's the volume? Okay, well, I heard a rumor. Oh no. Okay, I'm gonna do. No, that's not trading. That's gambling. We don't gamble. All right, so switching now over to the gold chart, all right, keeping everything in focus here. If you look at this gold chart, doesn't this gold chart look familiar to you? It should, because it's a healthy bull market like the NASDAQ chart, remember? Remember? The only difference is it built its base right here, just like the NASDAQ did, got that initial thrust, then you got a little bit of sideways after that pullback, and then you went up again, and then you built another little base. You retested to show the strength of the market, and then here we go. From this here, you went from 1,600 all the way up to almost 2,100. Okay, all right, that's a lot. That's a lot. All right. You want to see 500 points like that? You can see 500 points like that. All right. So this is another example of a good, strong, mature bull market. Every correction to the trend line support builds another base for another blast off. Now we're building a longer, more solid base here. The wider the base in a strong, mature bull market, the more powerful the upward thrust. And this last one here from this support base, look how this thing just lifted off. All right. So all things being equal, I don't think we have 4 months yet. Let me see. This is all right, March the 25th, and then here we are up to here was August. So this one lasts a little bit longer. It's like 5 months. All right. So the other chart was 4 months. This gold chart's has gotten an extra month. We lost this month because we've been consolidating. As you can see, we're trading really from here to here. We're not going anywhere right now. We're flip-flopping. That's what you see here. You're just flip-flopping right now. And again, remember the algo shifts I was talking about. You're starting to see signs of that now. Look at this last rally alert here. All right, so 1, 2, 3, 4. Today was day 5. We got a little bit of upside production before the market reversed. All right, so now where do we go from here? All right, 3 to 5 days out is how the alerts go. We got to day 5. We finally got that upside production, but then it fell down into the close. All right, So now we have no new signal for tomorrow. All right, the system is still laying on the long side of the market because this is a basing pattern. It's saying, okay, I believe every pullback is going to be bid up here. So we're gonna keep doing until we get another signal. Now, I believe this thing is gonna, if it doesn't take off tonight into tomorrow, it'll probably do it Sunday night into Monday. Because look at here, the bearish weekly trend momentum reading has dropped off today. It dropped off the prior day, and it has not relocked back in. That's a good thing. Momentum is still flat too, but we have not relocked back in. So that makes me think that that's exactly what we're seeing. The only thing that gives me just a little bit of hesitation is that this base doesn't have an upward arc to it. It's just literally just right across. It's right across. It's just horizontally across. No upward thrust. Normally you would see a little bit of arcing upward thrust, letting you know that, yeah, we're going to make another run at this overhead resistance and just burst through. But this one's kind of like just horizontally flat. All right. So I'm thinking that this one could put in another down leg, possibly. What I really would like to see is some bullish momentum readings for Friday to carry us into next week. So basically, the gold futures needs to close tomorrow above $1,946. It has to do that. If it doesn't, then that's where my fear comes in of another leg down. All right, so $1,946 is where gold needs to close tomorrow in order to take that fear off the table. Just like the NASDAQ 100, which looks really clean. We got a crash alert for that tomorrow. For tonight into tomorrow. But as long as the NASDAQ can close above 11,736, it's going to be all right. That means you would have to have a 200-point drop tomorrow and close at the low of the day in order to take that off the table and open a bearish window for Sunday night into Monday. All right. So let's finish with silver here real quick, and then I got to run. Here's your silver. All right, so we had that rally alert. We got a little bit of upside production. Then the market reversed into the close, giving us a crash alert for tonight now into tomorrow. So this one is flip-flopping too. This can happen. This can happen. All right. It's nothing to be alarmed about. We're consolidating up here. We're getting flip-flops. That's fine. Not a problem. Silver can do that. Silver can be a lot more volatile, and the consensus can get flat. Your momentum can kind of flatten out like we've been seeing here. We haven't had really no conviction. We're just moving sideways. But the thing about this one is it's doing it with a kind of arc up, which is what I wanted to see in gold. This gives me more hope that the market will probably flip-flop again, give us no downside production tonight and tomorrow, and actually rally, even gap up higher possibly on Sunday night and on Monday morning. See what I'm saying? Because it has more of a sloping upward arc to it. So this is the kind of thing you want to see if the market's going to consolidate topside the Kumo cloud and the trend line support. So just things I wanted to point out to you guys tonight, just to show you what's what. And to bring some encouragement to you. Now, as you know, I do not like to initiate new positions going into the weekend. There are exceptions to that, but I don't feel that tomorrow merits that exception. I just don't see too much going on that would make me say, you know what, I think I want to be involved, one way or another. So I think I'm going to sidestep. I want to see really how does the market react tomorrow? What kind of close are we going to get? Because I think tomorrow's close is going to be very important. And also, do not forget what I told you. Tomorrow, you have a plethora of economic data coming out. Big economic data. It's not going to be any joke up in here tomorrow. Tomorrow morning, it's going to be on and popping. So you probably may want to just sidestep. If you don't have any new positions already in the market, you may just want to consider sidestepping tomorrow and just see what the market does. See how the market closes tomorrow. I think tomorrow's close is going to tell us a lot. It's going to answer a lot of questions, like where are we going from here in a lot of these markets. There's so many real reports coming out tomorrow that is so market moving. I don't think you want to be involved. I'm just saying. I think you may want to take the day just to evaluate what's going on, because we have no idea what the reaction is going to be to all that news tomorrow. You got the finality of Jackson Hole. You got, all this stuff coming out, consumer, jobless, PMI, all this stuff coming out, consumer sentiment. You might want to just chill. I don't think you want to step in front of those trains because we have no idea what all is going to be said and what's going to come out. Furthermore, unless you're like in just ridiculous substantial profit in some things, you may not want to look to hold anything long over the weekend. All right. You may not want to be long too many things going into the weekend. Not telling you what to do. I'm just telling you what I'm doing. I'm not looking to carry any long positions over the weekend because, again, it's just too much uncertainty and we just don't know what is about to pop off. And I don't want to be nowhere near it. If it's going to get ugly, I don't want to be exposed. I would like to have a good weekend and chill, not be all nervous over the weekend like, oh my goodness, is my face going to get ripped off? Plus, there's rumors of war floating around, ladies and gentlemen. There's some word on the street that people have been gearing up for war, physical war. Israel may get attacked. I don't know. All right. I can only tell you what the word on the street is. I can't tell you anything definite or for sure. I'm just telling you, I heard through the grapevine that Israel might get attacked. So it could be on and popping in different places around the world. Don't forget to, I told you earlier during the week, it looks like the U.S. is gearing up for war with China. War with China means war with China and Iran, just so you know. All right, so the weekends tend to be weird. Things tend to pop off on the weekends. So I just don't feel comfortable holding anything over the weekends. Every now and then I may put on a short position, a small one, just to have like a lottery ticket in my back pocket in case something stupid does jump off. But because of the age that we're in and this election and all this stuff happening, what we don't know is what people are really capable of and what they're willing to do to push forward their agendas. So war could pop off, but then there could be a break-in press conference out of the Pentagon or the White House saying we just passed this emergency measure and every American's going to get $5,000 in their checking account first thing Monday morning. And instead of the Dow dropping 50,000 points, it's up 50,000 points because everybody's happy they're getting a $5,000 check. So things like that is the uncertainty I'm talking about. So you probably want to protect yourself. All right, I'll do one more. I'll do Ethereum and then I got to go. All right, here's Ethereum real quick for you. All right, here's Ethereum. Ethereum, as you know, we've had this crash alert. Today was day 2. All right, again, the bears are still in control here. We got a bearish weekly trend momentum reading. I still think this one wants to gradually make its way back down to the trend line support around the 330-ish level. All right, and you can see that the momentum here too is pointing down, but not with a whole lot of momentum. So right now, I'm just going to say that the bears seem to be still in control of this market until they're not. All right, so you guys know what it is, man. PulseWaveTrading.com. Come learn how to break bread with us. Learn how to trade these markets correctly and effectively and efficiently. The only way to do that is to get a hold of the pulse waves, man. You need them. You can't be in these waters without them. Sharks in these waters, man. PulseWaveTrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.